we've got a beat on the top and bottom lines for Adobe. Not as big a beat as some might have gotten used to for Adobe, but a beat nonetheless. Adobe reports $2.29 billion in revenue, above $2.25 billion expected at consensus. Earnings per share non-GAAP at $1.73 versus $1.69 expected. If you take a look at the segments, the digital media segment came in about in line, $1.61 billion, a little bit better than expected. The same thing for the creative segment, the revenue at $1.36 versus $1.35 expected. Annualized recurring revenue for the digital media segment, $6.4 billion exiting the quarter, a quarter-over-quarter increase of $339 million. Creative segment, annualized recurring revenue, $5.66 billion. Document Cloud, $744 million. So solid performance across the board from Adobe. Have to wait on the guidance. That should be in some slides that we'll get momentarily. And also lots of questions swirling around Adobe and acquisitions. They did announce an acquisition of Magento Commerce not long ago. There are more rumors swirling around what they might acquire next. We'll listen on the call to see if we get that. And even if we don't, I've got Shantanu Narayan on Squawk Alley tomorrow morning. I'll be live with him in San Jose, guys. Back to you.
John, we'll certainly tune in for that. Thank you very much. Mike, the shares jumping all around. They were up 1%, down briefly 1%, now up 0.5%. The shares have performed well.
Extremely well.
And this is a decent beat, but they perform well.
Yeah, and they're, at least right now, kind of holding the value. Stock has quintupled in 5 years. And it's accelerated in the last 2 years. So the fact that it can get numbers good enough to hang in there is probably okay. I actually think I turned to something like free cash flow yield to say, how is this thing really valued by the market? It's like 2.5%. It hasn't really changed that much in the last couple of years. So I think that's where the market for this high growth company that's totally entrenched in this world of software and cloud, I guess that's what the market says we're willing to pay right now.
24% revenue growth.
I think it's the digital annualized recurring revenue number that's the key for this particular stock. That's what this thing trades on, and the fact that it was just in line is probably why you're seeing a tepid kind of response. Certainly a good report, but I think people wanted that to be beaten. I have to see what operating margins are like as well, because we are expecting 110 basis points of improvement sequentially. So you got to get through a little bit of the details, and the conference call is always really important.
And Mike, if we put a third A into FANG, this is the stock.
This would be the one.
This would be the one.
Yeah, we've said that for a couple of years.
There we go.
Yeah,
we can move on to the other one.
I thought it was Apple.
Yeah,
no,
this is the third one.
Oh, it's Apple.
Well, I think Alphabet. We could have 4 if we like.
Okay.
Yeah.
But then it's
That's the G.
We have the guidance from Adobe about in line to better than in line on the guide. They're guiding in the next quarter to revenue of $2.42 billion. The street was looking for 2.4. Non-GAAP earnings per share of $1.87. The street was looking for $1.86. And also net new annualized recurring revenue of $385 million. So that's new revenue that they expect to be coming in at that rate if you were to annualize it. Because the cloud is their bread and butter at this point, that's a very important number that the street keeps its eye on. So they're saying, better than $1/3 billion in net new ARR they expect to be rolling in starting in the next quarter. The stock, as you guys have mentioned, has been up and down around the break-even point. After hours, this is one where the after-hours commentary and everything else we get from Shantanu Narayan and his team is going to be important. Of course, that stock has been trading near all-time highs.